morning, guys. Currently, you can see time is around 10:30. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis. As today is both Nifty 50 as well as Bank Nifty expiry. Let's look into Hero Zero trade as well. Wait till the end of the video, guys. The indicators which I'm using are the 921 moving averages, the 200 moving average, and this is the weekly VWAP, guys. You can see was on Monday. So if we try to plot the anchor VWAP level here, you can see price taking support over here. The price took support over here. So this is weekly VWAP. So usually weekly VWAP plays some sort of significance, and this is the demand zones over here. Let's look at today's trade, guys. You can see a lot of sellers might have entered here, keeping their stop loss just above those candles. You can see the market targeted all those sellers who might have entered here, and the market gapped up above previous high, yesterday's high, and targeted all those sellers who might have entered. And you can see as the market gapped up, consolidated sideways, and showed some kind of manipulation that the market might head towards the downside. But you can see the market couldn't cross the 5-minute zone over here and the 21 moving average. Price took support at this level and price rallied all the way towards the buy side. If you try to plot the retracement levels, guys, you can consider this retracement, the common point between this. So the common point between this, you can see the market came all the way to 3, 3 point, 3.16 level. You can see here how the market came all the way to this zone. And from here, the price rejected. This is the weekly pivot levels, guys. So for better confluences, I'm trying to use weekly pivots as well as weekly VWAP level. So this is the day VWAP level. You can see the market gapped up above the day VWAP. And you can see once if after seeing this kind of impulsive candle, guys, trying to take support from this 5-minute zone as well as breaking the VWAP level as time moving average towards the upside, you could have just entered here and keeping your stop loss just below that candle itself. So this is how you could have entered in case if you might have missed out taking position here. You can see the market manipulated towards the downside, initiating sellers to enter the market. So that was just a manipulation, guys, in case if you might have been very vigilant of how the market usually behaves. Accumulation, manipulation, and distribution. First is manipulation, accumulation, and distribution. But that's how the market here. In case if the market would have rallied towards the upside without this kind of impulsive momentum towards the downside, there wasn't much liquidity. So a lot of sellers might have exited this position, who might have entered long here, who might have entered long here, expecting the market might go higher. You can see this manipulation is where might have triggered all those stop losses, and you can see after triggering all those stop losses, the market rallied towards the buy side. This is about the first trade, guys. And if you consider this impulsive momentum, the last common point between this to the common point between this, you can see here the price took support from this pivot level. So the VWAP level over here, the price tried to break, but you can see the market further continued towards the upside. So in case you can see this kind of support over here, you could have entered your long position, keeping your short stop loss here, and you can see this kind of trend line liquidity also here, which tried to break towards the upside, showing a clear sign of bullishness, guys. You can see that the market here took support from this pivot VWAP level and trying to head higher, found this kind of liquidity channel pattern, broke towards the upside, and took support from this 9 moving average, further broke towards the upside, again took support here, again tried to break out this structure. But here you can see the market broke this low from higher high to lower low, guys. Here is where the market formed some sort of chalk over here, clearly changing the momentum from bullish to bearish. So this is the chalk, guys. In case if the market sentiment would have been clearly bearish, no, guys, the market would have broken towards this high as well. With this kind of momentum, you couldn't have expected some kind of retracement. Or in case if the price would have retraced after this kind of bullish candle, you could have just tried your stop loss to this level. So in case if market retraced, your stop loss would have been hit. You could have expected a good rally, guys, like this to the market taking support, and this is how this high could have been broken, but the market couldn't break this high and formed a chalk over here. And if you see here, guys, if you try to plot the anchor wave up level here, you can see the price rejecting over here. And after this chalk, if you try to plot the fib levels, the common point between this to the common point between this, you can see the price couldn't cross this 50 level over here. This is the 50. Market faced some sort of rejection over here. So you could have just entered short position at this momentum itself, guys. This is where you could have entered, keeping your stop loss just above that candle itself and targeting. If you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level or the 2.68 level, but you can see the market came all the way to this level, guys, or the 200 moving average. This is where the market came, or you could have just hold it and you can see how the market rallied all the way towards the downside. But for time being, let's keep it like this, guys, only, guys. So you can see the market came all the way to this zone. So you can see again the market broke this low also towards the downside. This is the breakout structure after the chalk formation. This is the chalk. And if you consider this swing also, the market here respected 50 levels as well. So the high to the counter point in this, you can see the market here tried to rally upwards but faced rejection from this anchor VWAP level over here as well as the 50 level. Here also is the same happened, guys. Here also is a 50 level and as well as anchor VWAP level. So you can consider this to be a 50 level. And you can see the market here continued towards the downside. And again, it broke structure here also. Here, the market even broke structure. And here as well, the market clearly broke this low, also clearly making breakout structures towards the downside. And if you consider this swing momentum, or you can consider this to be an order block as well. So if you consider this, you can see that the market rallied all the way to this order block, guys, and face some sort of rejection. This is the 1 minute order block. You can see this 1 minute order block where the market faced some sort of rejection, again continued further towards the downside. So if you consider this swing high to this swing low to this swing high, you could have exited the 100% move or the 2.68 move. This is the 2.68 of this, or you could have targeted this level also. Short position here, keeping your stop loss just above and targeting all the way to 1.68 level. This is one trade where you could have easily taken the 100% move, guys, or exited after seeing such kind of bullish candle. So you can see this is the 100% move. So if you consider this swing, guys, so this swing to the common point between this to the common point between this, you can see the market here at the 0.38 level faced some kind of rejection by this bearish engulfing candle over here. This is a 0.38 level. And if you try to plot the common point between this to the common point between this to the common point between this, you look at this zone, guys. This is a 0.5 as well as 0.6 zone where price took support from this level. This is a 0.5 as well as 0.6 zone. Usually price tends to take support at these zones. And this looks like a profit booking zone. You can see even this zone, this momentum now, guys, was not very impulsive. As you can see, the clearly it formed a channel pattern over here. In case if the market sentiment would have been clearly bearish, the market would have clearly broke structure of this low as well with fair value gaps. So you can see this momentum over here showing some kind of bearishness, but you can see this support acted as resistance over here. You can see how the market clearly broke, again retraced, took support here, faced resistance and continued further towards the downside. We'll come to that later, guys. You can see this channel pattern, guys, broken towards the upside. So you could have entered long position, seeing this kind of rejections from 9 as well as 21 moving average or somewhere between this zone, targeting this high also, guys. That's how you could have taken a long position as well. So after this kind of rejection, when price clearly broke after this kind of trendline liquidity, you could have just entered here, keeping your stop loss below this 200 moving average and targeting all the way to this high, guys. This high you could have targeted. That's how you could have. Again, you can see this kind of demand where the price came here, again, try to break this high also. But you can see here the market showed some kind of bullishness, guys. You can see the clearly market broke structure towards the upside, showing some sort of bullishness over here. This is the break of structure. And here also the market showed some breakout structure. And in case if you consider this last down move to be an order block, so you can consider this swing in case this is the order block. So you can see the market came all the way to this order block level, mitigated this order block. You can see this is 1 minute order block. The market touched here and rallied towards the upside. So in case if you find the common point between this to the common point between this to the common point between this, you can see the market came all the way to 100%. But you can see you could have targeted all the way to this zone, guys. So this is how you could have entered long position, keeping your stop loss just below this 1 minute order block. This is the 1 minute order block, guys. So, and targeting all the way to 100%. This is how you could have targeted. In case if the market sentiment would have been bullish, no, guys, you can see after this breakout structure, market again retraced back to this 550 level over here. You can consider this to be 550 priced face, some sort of rejection over here, and continued further towards the upside, but couldn't make an higher high, guys, clearly changing the market sentiment from bearish to bullish. You can see clearly the market took support here, broke, retraced back, and in case if the market sentiment would have been bullish, no, guys, the market could have clearly break and continued further towards the upside. But here you can see the market clearly broke and closed below this low. So you can see when the market closed below this low is where the chop formation has happened. So you can see this is the day VWAP level, guys, and this is the anchor VWAP level where it showed multiple rejection. And again, also it acted as a rejection over here after the price formed a chalk, retraced back, couldn't cross these levels over here and continued further towards the downside and even broke this 200 moving average. After this break, now guys, you can see this kind of channel pattern over here showing some kind of bearishness around this 200 moving average as well as the 9 as well as 21 moving average as well as the anchor VWAP level. So in case if you might have entered short position, you could have just entered during this candle, keeping your stop loss just above that candle itself, guys, and targeting all the way towards the downside. So if you consider the common point between this, uh, to the common point between this, to the common point between this, you could have targeted all the way to the 1.68 level. You can, or the pivot levels, guys. This is where you could have targeted all the way. Or this channel pattern, if you try to plot the swing structures over here, this low to this high, you can see it came all the way to 4.26 level. That's how you could have targeted till this low and exited your position here. And after retracement, you could have considered this swing structure, the common point in this to the common point in this, where the market faced some sort of rejection at this 550 level or the order, the breakup block level here, guys, where here the price formed some kind of support and here it facing some same kind of resistance. This order block only works for one time. So you can see, guys, how the market clearly again retraced back, couldn't cross this 9 as well as 21 moving average towards the upside and continued further selling. So short position here, and you could have trailed all the way to this zone, guys. This is how you could have targeted. And this is the hero zero trade rate we could have taken in Nifty 50. You can see how the market here throughout the day, the market towards the put side, guys. There wasn't much premium moves, but you can see during the last uh, half an hour or during the last 45 minutes, you can see the price trying to gain some kind of momentum at the RSI. You can see, look at this, guys, when at this level where the RSI is being broken down below the 50% over here, and here is showing some kind of support over here. That's where you could have entered your long positions, keeping your stop loss just below that candle. From 14 to you could have targeted all the way to 50, 155 as a 10x move, guys. This is what you could have traded today. A 10x move, an investment of 1 lakh could have made you 10 lakhs today, guys. That's the power of compounding. So you can see how this kind of momentum you could have traded easily from 13 to all the way to 155, guys. And this is how you could have traded uh, the Bank Nifty positions. So it's you could have bought it around the 40, 48, 900 put options, keeping your stop loss just above that candle and targeting all the way towards the downside. That's how you could have traded. Look at this, guys. This one here is another good trade. Here, another good trade. Here, you could have just scalped a short trade. You can see the 1 minute order block being respected over here and targeting this high, and further continuation of bullish momentum didn't happen, trying to break towards the downside, chop formation. Again, the market kind of retraced towards the 200 moving average and couldn't face some sort of rejection here and continued further selling towards the downside. A very easy trade, guys, where you could have taken your positions and made a decent amount of profit. That's about Bank Nifty. Let's look into Nifty 50, guys. So in Nifty 50 also, I have plotted the 5 minute zone, the mid of the first candle, and this is the 200. This is the weekly VWAP level, guys. So in case you can see, this is the weekly VWAP I have plotted. So sometimes this weekly VWAP shows some kind of confluences, guys. So it's very important that, so you can see the market here broke towards the downside again, retraced towards the upside, faced rejection from weekly VWAP as well as 200 moving average, and you could have easily traded towards the downside. Even yesterday also you could have made an hero zero trade. But you can see here also the market today, after the market clearly rallied towards the upside, faced rejection from this 5 minute zone and clearly broke structure towards the downside. You can see here the market clearly broke structure. You can consider this to be a break of structure. So if you try to plot the common point between this to the common point between this, you can see this is the 550 level over here. This is the 550. So the market retraced all the way to 550 level. So if you try to plot the common point between this to the common point between this to the common point between this, you could have exited at 100% move over here. You can see how the market came all the way to this level, and this is the 100% move. Keeping your stop loss just above this candle and targeting all the way to this momentum, guys. You can see again the market here rallied upwards, faced rejection from this 200 moving average, and continued further towards the downside. And here you can see this kind of channel formation over here, clearly showing some kind of bearishness. Again, the market broke. So you can see here the market clearly broke, guys. So if you consider this swing over here, this high to this low over here, you can see this is the 550 over here. This is a 550 level. So in case if you try to plot the fib extinction levels, the high of this zone to the low of here to the high of here, you can see the price taking support from 0.5 as well as 0.6 level. This is a very important support, guys. You can see, or you can see the market didn't even reach all the way to 100% here. So you can see again the market rallied all the way towards the upside, even breaking this high over here, showing some kind of bullishness. So this is the breakout structure. But the one thing which you need to remember is that, guys, when the market found some kind of channel pattern, broke towards the downside, again retraced back. Okay. So taking support from the 0.5 as well as 0.6 level, if you try to plot the anchor VWAP level here, you can see price taking support here, guys. You can see weak rejection. So whenever you find such kind of weak rejection from anchor VWAP levels, you can just enter long position here, keeping your stop loss just below that anchor VWAP level. And if you try to plot the fib extinction levels, so in case the common point between this to the common point between this to the common point between this, you could have targeted all the way to 2.6 level, guys. This is the 2.6 level where you could have targeted. This was a very good hero zero trade which you could have taken in Nifty 50. Look at this, guys. I think you are getting what I'm saying. You can see this kind of impulsive momentum which broke actually structure towards the downside. Let me repeat it once more. Here it broke this structure, guys. This is the break of structure over here. After this breakout structure, the market formed some kind of channel pattern, rejection of price from 550 level and tried to break towards the downside. Clearly broke structure over here. But what we can see here is that when the market broke towards the downside with fair value gaps, and if you consider this zone, guys, here the fair value gap and this here also is the fair value gap. If you consider this zone over here, this is the PDRA, guys. This is a PDRA. You can see how the market here formed a fair value gap. It took support from 0.5 as well as 0.61. Again, try to rally towards the upside with fair value gaps over here, fair value gaps over here. And you can see when you coincides the fair value gaps between these two zones, you can see this is the fair value gap of both common between these two. And you can see price rejecting from these levels and the anchor value gap level support over here, clearly showing some sort of bullishness, guys. So you could have just entered your long position, keeping your stop loss below this candle. In case if the market head towards the downside, you could have taken a stop loss over here. But you can see how the market here took support here, continued all the way to 2.68 level. And you could have made a very good, decent profit over here, guys. And in case if the market sentiment would have been bullish, no, guys, the market clearly broke structure here. And And again, the market retraced here. So in case if you find the support over here, the common point between this to the common point between this is a 550 level. So in case if you see here, this is the 550 support over here. So the market here took support over here, again broke towards the upside, but here you can see faced rejection from this 200 moving average as well as the day VWAP level. The price couldn't cross this level, and here also the pivot level resistance over here as well as the 2.3 level target over here is where the market uh, showed some kind of rejection. In case if the market sentiment would have been bullish after this kind of momentum, retraced back and continued further like this, guys. This is how the market will behave in case if the market sentiment would have been bullish. But here you can see the market clearly rallied towards the downside, again headed towards the continuation, took support from here, and again tried to head higher, but you can see price rejecting from this 200 moving average and clearly broken towards the downside. So after this kind of rejection, after the price break this low, you could have entered short position and targeting this zone over here. That's how you could have entered, guys. But in case you can see here, the market here consolidated with no clear break of structure. But here you can see clearly the market broke structure. You can consider market broke structure. So if you consider the 1 minute order block here, this is the 1 minute order block. So the market came all the way, rejected price over there and continued further towards the downside. So if you consider the common point between this to the common point between this to the common point between this, you can see you could have targeted the 100% move where the market came all the way to this level. This is the 100% move. And here is where early sellers might have got trapped, guys, because after this kind of huge bearish candle, a lot of sellers might have entered expecting the market to go further towards the downside. But you can see, in case of these candles, you should always try to clip your stop loss above that candle itself, guys. In case if the market tries to break towards the upside, you should enter long position. So this is the short trade where you could have taken, keeping your stop loss just below this candle. This is the target where you could have taken. After this kind of rejection also, you could have entered short position, guys. This is how you could have entered. This after this 200 moving average rejection of price, after this huge bullish momentum, you could have exited and you could have targeted somewhere, guys. You could have just scalped and you could have targeted this low also. But let's not take that because this is just pure, not a price action trade, guys. This is just how the market behaves. So you can see after this 100% move, the market rallied towards the upside. There wasn't much momentum. You can see this kind of trend line liquidity over here. Once if this is broken, you could have taken short a trade over here where the price couldn't even cross. You can't actually trade this kind of trades, guys. So after this 100% move, when the market clearly, if you try to plot the anchor gap level over here, you can see price taking support over here, support over here, support over here. So in case if you see after the market clearly broke this high of this huge impulsive candle, you could have taken long entry, keeping your stop loss just below that candle itself, and you could have clearly targeted a decent amount of profit. But as this is Nifty 50's expiry, you might have not expected a good premium moves here, guys, because this was for option sellers. So option sellers might have made a decent amount of profit. So this is about my Nifty 50 trade analysis, guys. So there wasn't no hero zero trade setup. Only you can find this trade where you could have made a decent amount of profit. And this was another quick scalp where you could have entered. This is about my Nifty 50 trade, guys. So in case if you find my trades helpful and showing some kind of knowledge to you guys, please like, share, and comment. And if you have any suggestions, you can leave a comment below. So I will definitely read, guys. So thank you, guys.